Yo, what's good, y'all? It's your boy Chak Investing. So I'm a bit late on this video where we're doing the daily NQ and ES review, trading NASDAQ futures. Particularly, we are trading ICT concepts and one particular concept in particular. Damn, I just used particular like 5 times. Um, it's called the ICT 2022 model. Now, what is really beautiful about this model is that ICT says it himself. It's probably the simplest model out there that you can learn if you are a new ICT trader. He literally said, and this is in his most important ICT mentorship, pretty much everyone references the ICT 2022 mentorship, hence the 2022 model, which if you have not watched, make sure after this video you go and watch that whole series. It'll really complement everything you're learning on this channel. Is that if you could teach his daughter one thing about trading, one model she could just use for life, she doesn't have to really worry too much about all the other things that he's teaching, it's going to be the ICT 2022 model. Now, that is why I decided to go for it. Because, for me personally, I'm a guy of simplicity. And I want to make sure that what I'm looking at the chart is very obvious for me and gives me high confidence to enter a trade. Now, on this daily review, the reason why I'm doing a daily review, right, whilst also teaching you the model is because the most important thing besides knowing what the model is actually knowing where market is going to go, right? And that is why watching his IC 2022 mentorship, it'll help you understand higher time frame buys, where's price going, because at the end of the day, like I always teach on this channel, higher time frames trump lower time frames, right? So where you're taking an ICT 2022 model on the 5 minute, 1 minute is going to be dictated by what's happening on the 15, 1 hour, 4 hour daily, right? As well as where are the respective draws on liquidity, such as equal highs, equal lows, that we'll get into on lower time frames. But first and foremost, it's really helpful. You just like have way more confidence in your trade if you know where the daily profile is likely to go. If you know where the 4 hours is likely to go next, like it'll really help you to hold trades. You can even hold runners for 100 points, 150 points plus, right? So we'll be going over some trades that I took yesterday, some that I shouldn't have, as well as just doing a daily review using ICT concepts and teaching you guys how to use them in order to establish a daily bias and also how to enter in the 2022 model. Without further ado, let's get started. Please, before we continue, if this sounds good to you, you're excited about learning what's on this page right now, press the like button. I'm not asking for any money, right? This is free content I'm putting out here on YouTube for you guys to learn, and I've done this for 15 months now. Where I just want to be able to give back and show you guys, what are some of the things I've learned and how I'm using it to make some money, right? So without further ado, press that like button. Also subscribe. Press that subscribe button so you don't miss a single day of this series. And get notified so that you can get notified every single time I'm dropping a daily review and what were the trades I went over today. Very soon I'm going to start going live, but that's only when I start getting a couple more thousand subscribers. And once I start going live, then you guys can actually see what trades I'm taking live as I'm entering. All right, so make sure you press that subscribe button. Also, I have a free Discord below as well. So go click that link after so you can enter my Discord, and I'll post trade recaps as well throughout the day as well. So you don't have to wait till the end of the day on the daily review to see what I've been taking. All right, so this is yesterday's daily candle. Huge, right? What was yesterday? Yesterday was the day after the Tuesday election, right? So in the morning, we saw that Trump had won the election, right? Obviously, markets thought that was a very bullish thing, given his policies that are going to be his policies that are supposed to really help corporations in this country to turn around a lot more profitability by lowering taxes, as well as a lot of the U.S. companies that are on the NASDAQ. There's going to be tariffs that are going to be going against international countries, so there should be more profit for these other countries. There should be more profit for these U.S. companies, and so that's like also news context. Like when you see price ranging somewhere and it's just moving and moving, it's likely because there's some sort of news macro wise that has been released or that is happening that is making price just like kind of just going in one direction. Why? Because at the end of the day, yes, ICT says like technical concepts is really what is pushing price. Like there's a manipulator. That's correct. I think so. Absolutely. Because the way that price moves in books, it definitely is manipulated and algorithmic in nature. But also at the same time, you cannot discount the fact that algorithmic nature also has to be in line sometimes with, especially long term, with whatever the macro bias is. right? A lot of times, like you'll notice that price is gonna like fall down all day one day because like Nvidia, had some really terrible news, or it's going up all day one day because Trump won the election, right? So algorithm is lining up with macro, and it'll help you guys understand why the algorithm is lining up with the macro, because you need to understand what's happening in the macro viewpoint. So now that we've established our bias, we know that today is likely just going to be a bullish day all day, right? This was yesterday's candle. How could I also recognize that even with some technical concepts that this was going to be a really bullish candle, right? Yes, Trump winning the election, that was highly likely to happen. Two, look at this day, look at this candle's high and low, right? Let's take off everything right here. This candle's high and this candle's low, right? As you can see, had not been taken out yet, right? So we were technically consolidating in this daily candle's range. And at some point, we're going to need to take out this daily's candle high and low. This candle is kind of called a volatility filter, right? Where the next couple candles can be consolidation candles, right? Or the immediate candle after it needs to explode. So if you don't see the second candle after this first candle not exploding, then we're probably going to consolidate either the next day or the second day. And we're not going to take out this high or low yet. But you can see on the third day here, right? Or technically the fourth day after this candle formed, we expanded much higher past this daily high and low. That is very characteristic. You can see that happening. Look at, I believe ES did something very similar a couple of days ago. I'm trying to find that candle here. Like this candle right here, this daily candle had not been taken out by this candle, right? So it kind of looks like the similar candle we just talked about before. It's called a volatility filter candle. It typically happens on a day that is where it's inside the previous day's daily candle range, where you can see the next day after that, it exploded and took out that high. So, when you're seeing a candle that's inside the daily range, expect one of the days following that. If it's not the first, it could be the second, third, or fourth, right? Or fifth, where there's going to be an expansion day. And so that lined up pretty well on NQ. With Trump winning the election, right? So we took that out. Here's another thing. The third thing that also would have told me that this could be a very expansive day, right? And why it would be particularly bullish is because look at this low right here. This low was not taken out by this candle's low, right? But on ES, this candle's low was taken out by this candle's low right here. That same day on Thursday last week. So this is what we call smart money technique. It's called SMT, right? Where if a similar indice, right, or a similar asset is not taking out the same highs and lows, right, it starts reversing the other direction. That is an indicator that this was really just a purge on liquidity, and the price is actually really bullish. And you can see NQ is moving much faster, right? Or NQ is showing bullishness, right? Because it was not weak enough to take out this low, right? But ES was, and so it's telling you that it's ready to reverse and go in the other direction. Right, so SMT, I can do a full scope video on that. Let me know in the comments below if you want me to do that. By the way, if you like what you're hearing so far, press that like button. Also, don't forget about my Discord that I have in my chat below. Please feel free to join that as well. And also subscribe if you like what you're hearing so far. Now, let's go to the 4 hour. Let's put these candles back on. So what happened on the daily here? We expanded, we took out this daily high as well, and we've taken out the previous week high as well. We closed through this daily SIBI and this weekly SIBI level as well today, right? So what are we saying here? They're going to be bullish. And look at these orange lines right here are all like these are a couple lower time frame highs right here, high right here, high right here, high right here. So I saw that we're pretty expansive, and I know that Trump winning the election is going to keep us probably rising for the next couple of days. So I've marked out a couple highs, key highs on the daily and the 4 hour and the 1 hour that I want to keep in mind that price could be using as targets to get to, right? That can inform my trading. Now let's go to the 4 hour. 4 hour, right? Starting yesterday. So this is the Asian 4 hour candle. We closed through this 4 hour inversion fair value gap. Let me show you that. And notice that I'm putting this fair value gap from this high down to the low high of this volume imbalance, or the low of the volume imbalance. You don't just put it to this high, because in this fair value gap, there's a volume imbalance in place. And so the whole gap right here is inclusive of this fair value gap and the volume imbalance, right? You can see on lower time frames that we're respecting the consequent encroachment of this particular fair value gap. So that'll show you that this is actually the true fair value gap. ICT talks about this, that this is one type of fair value gap. Yes, it could also be this, but that's only when there's no volume imbalance, right? So a gap, right, is showing displacement. In case you don't know what a gap is a gap in between two candles where there's no wick, right? It's just bodies, right? Or there's no trading action, there's no body closure right here. And so this is a fair value gap, right? This is a PD array that you can see price react through. So you see we closed above that gap, right? And price came back, tapped it below. Even though it mohawked a little bit out of it, we did not close through it, right? So we're still supporting it. That's still showing that we're supporting it. Plus, this is a really bullish candle. The next candle after a candle that looks like this is typically going to be bullish, right? This is like establishing 4-hour, 1-hour high time frame bias. Again, I'm telling you this because this will help you inform your lower time frame trading. If you're seeing this on the 4-hour, you know that you should be taking longs only on NQ or ES, right? So price comes in, comes to the 4-hour IFBG, also closes through this daily CE, consequent encroachment right here, and above the weekly high, weekly CB high, closes above it, forms another 4-hour BISI right here, 4-hour FBG BISI, buy side imbalance, sell side inefficiency, right? And then on the London, this is around London time, it comes down and fills that 4-hour fair value gap, and then it goes higher. So this is IRL, internal range liquidity is a fair value gap as well, to ERL, to external range liquidity over this high. You can see we took that out, right? And we're taking out a high that is marked by this yellow candle that is all the way over to the left, right? That is that high right here. And so we see that we took that out, and that was the AM session target. After overnight, we saw that we came back to the 4-hour fair value gap. We started delivering from it going into the open. I know that price is just bullish, right? Especially have that daily SMT below here. That is still on the daily profile, still printing bullish candles, right? And so we're going higher. We've taken out a few more highs as well throughout the day on the 4-hour. On the 1-hour, what do we see happen? So going to Asian, we just go higher. We come back down to a 1-hour fair value gap that's overlapping with this 4-hour inversion fair value gap, right? Hovering above the daily consequent encroachment CE, right, as well, finding support on that. Rallying higher, going through, so this 1-hour fair value gap formed later. That 4-hour fair value gap formed later, right? And so we go through higher, we form a 1-hour fair value gap that is now nested with a 4-hour fair value gap. Price returns back into it, close through the consequent encroachment of that 4-hour fair value gap. But as I mentioned, like if you close through a consequent encroachment on this channel, I say that a lot, it could be a very bearish sign and maybe we might be going lower. But if the next candle right after it immediately rejects away, then that's just really a mohawk, right? It's just a mohawk. It's basically saying that we're still respecting this fair value gap. But if this next candle after this closed with a little bit more magnitude, then I would have expecting us more bearish pricing, right? Or we're going to some other discount PD array before we're going higher, maybe purging some liquidity here short term here, and then we're going to go higher. But the next candle went immediately higher, so that means it's still bullish, right? Now it's 7 a.m. 8 a.m. we just have a candle with no movement, little to no movement. We kind of wick higher in that open, right? Taking out the previous week high and then coming lower. And then look at how choppy price is for the next 2 hours here. When you take out a weekly level, this is the previous week high right here. When you take out a weekly level, especially a weekly target for the first time, you'll notice that price for the next couple of hours, at least 1 to 2, is pretty choppy, right? So that's pretty much a target for the morning. If you see that we hit that, like wait until the next macro, or wait until lunch to see if we can continue going higher. That's pretty much AM, might be a little choppy for the rest of the session. As you can see with these wicks, right? What would that look like on the 15-minute, 5-minute, 1-minute, right? Price is going up and down, up and down. Price eventually breaks through the constant encroachment of this wick on this 11 a.m. candle, and then we continue going higher, right? Like I mentioned, if you go through the constant encroachment of a PD array, right, and the next candle continues to expand, we're likely to continue going higher. So you can see we went through the constant encroachment of that PD array right here, which is this wick. Going higher, taking out a few more highs throughout the day. We're just ranging throughout the day. All right, so we've now established a couple things that showed us why we would range. That daily SMT, right? That daily high that we needed to take out, that with the volatility filter, as well as the Trump election. But there's also something else I wanted to show you guys on the lower time frame that I've talked about, I think yesterday as well. That also showed you that price is likely to go higher, and it's this opening range gap. Look at this opening range gap from 9:30. So notice that so basically ICC says that within the first 30 minutes of the opening range, which is basically from 9:30 to 10 a.m., there's a 70% likelihood that we do return back to the constant encroachment of this ORG, right? And so price would have likely, price is likely to return, especially with this like bearish candle that we saw, right? With this wick taking out the previous week high, then we had a bearish candle on the 15-minute. I actually took a short where I thought price was going to come down here and have a short-term short-term retracement down to the CE here, given that 70% of the time it's likely to do that before it's going to continue going higher. But given the market context, we're really, really bullish. You have the daily SMT, right? That's very, very characteristic. A lot of times, if you see a daily 4-hour run SMT where price can just continue to rally higher, just think about it. SMT, like after you see an SMT form, the next couple of candles are typically pretty bullish. That happens on daily 4-hour, 1 hour, which means that we're not coming back down and retracing to discount inefficiencies a lot of times. Sometimes we're just going higher and higher and only filling short-term voids, right? Not longer-term things. So price did not show a willingness to come back here, right? See how we kept this open all day and price just continued to range? Like literally 90% of the time when you see this staying open and price did not come down here during the AM session, we just continue to go higher, we're pretty much just going to rally all day. So that would have also informed my trading that I'm only looking for longs. Like I'm not looking for a single short. Even if you see a really nice, good looking short, but we have targets to hit above and we kept this opening range higher and the broader market context is bullish, you should not be shorting. Right. And that is a mistake I made twice today. Honestly, it's just like I should never have done that. Right. And that's the thing. It's okay to make mistakes. Like I'm reinforcing in my mind that I really should never have taken shorts today. And study like always have this opening range gap marked in your charts. And notice times where we're ranging, if we're bearish, like price is not going to come back and go up to this opening range gap. You'll see it staying open. So on the 15-minute, you have this breaker right here. Right. Actually, let's start here from Asian. 12 a.m. we make this low, price rallies continuing right after touching this inefficiency and this previous opening range gap. We continue going higher. I'm not sure what this is. Oh yeah, 4-hour CIBI. We find some resistance here throughout London. Make a high right here with this body. Come back down, pre-market. Touch the high of the weekly CIBI. Rise higher back to that 4-hour CIBI fair value gap. Take out this low, short term, this continuation purge, and continue going higher. Into the 9:30 open, we spike and take out the previous week high, come back and take out this 9:15 low. Just staying in the upper like maybe like 25th percentile of this opening range gap, showing that we're really bullish. On the 15-minute, we continue to make another bullish order block. We respect the this bullish order block by not closing through the mean threshold of it, right? We just continue going higher. Price makes a breakaway gap here, just continuing to go higher without feeling it. That means we're still bullish, we're still on side. You can be confident that in the next couple of 15-minute candles are going to be higher. And ultimately, we just failed to touch this other high, which is not an all-time high on NQ, but it's just another high to the left. We did not get there yet. We've taken out so many highs throughout the day. So price, just notice how the volume kind of just like, these candles aren't moving too much on the 1 minute. Like it's not that much movement, right? So just notice that sometimes that we can be ranging higher, but a lot of times like you can see a lot of short-term pullbacks on the 1 minute that can be going through like PD arrays. You think it's going to fail, but it's really not. It's just like we're in such a premium. So sometimes price can really just like wick back and forth, but it's still ranging higher, right? 5 minute, nothing too much to go over here. Same pretty much movements that we saw in London and Asian. Right, so pre-market we had this reversal, right, which is going to be leading to New York continuation, especially given a bullish time frame context, right? We continue going higher. We take out these equal lows after taking out the previous week high after the 9:30 open. We take out these equal lows over here, returning back to this 4-hour BISI, then going higher, breaking market structure, return back to a 5-minute fair value gap, right, around 11 a.m. macro, then continue higher and find support here on this bullish order block. Continue going higher, trickling here during lunchtime, consolidating for a while, and then right at the lunch macro, we're starting to expand some more. Come back down into this redelivered balanced price range, and we'll just continue trickling higher for the rest of the day. No trades on the 5-minute here yet, or a 15-minute that I've seen that is worth taking on the 22 model, right? I'm going to go over what the 22 model is, but this is very important. Right? The only thing that could have been pretty viable, so let me teach you guys what the 22 model is now, as you sat here for a while. The 22 model, right? So when you make a high, low, higher high, break up market structure right here, return back to a discount array, and then we go higher, right? So imagine this is what's happening here on the left. Price is going down like this. And then we take out these lows and then break market structure. There always has to be a fair value gap, right? And price goes higher from there. That's the 22 model. I have a much more better video on this at the end of this video as well that goes over this entry model in length, in great length. But just for now, just know that that's what it is, right? And it has to be within the proper time of day, right? Within the ICT kill zone. So anytime from anytime from 7 really to up to 9:30, 9:30 to 12, and then 1 to 1, maybe like 1:30 mostly until 4 o'clock. It can happen with any of those times, and it has to be most importantly within market context. So and also another thing with the 22 model is it's not just gonna like continue to go down like this sometimes before it forms. Sometimes the 22 model can happen like this, right? Where price is ranging up, and then it takes out a short-term low. But this is just a continuation purge. You think this is a break of market structure lower, but if the broader market context is to go higher, you can actually see it reverse again, leave a fair value gap here that shows displacement, and then we go higher. Sometimes it does not need to return to this fair value gap because this breaker over here can be in the way, or there's an inversion fair value gap over here to keep it, and let this be a breakaway gap, which would actually be very bullish for you. You want to see prices continue to go higher, right? So that is something that we actually saw in this particular example right here. So we see prices continue to show bullish price action, right? We're making higher highs, higher lows, higher highs, higher lows. And then here we have this low that was purged, right? But then we have a break of market structure, right? So we have this low, high, lower low that's taken out in this low, which you think is a break of market structure after taking out the previous week high to go and fill this. But really, we're bullish, right? Because of all the things I've mentioned. And then we go higher, break market structure again, come back down into a fair value gap, right? And the price continues going higher for the day. That could have been your 1 5-minute trade. But yeah, like this looks scary. It's coming back down with a lot of speed. But look, we're in such a premium. We've taken out the previous week high. Like you cannot expect price to just be super clean and just have a nice 22 model. Like you're gonna have to eat that if you really want to stay in that market. But if you don't have the guts to stay in it, then you should, not be. Right. So 1 second here. I'm actually in a trade right now. I just want to see how it's going. All right, doing all right. So I took this trade, by the way, this morning. This is now Thursday morning. I'm going over Wednesday today, but this is Thursday morning. So I took this trade this morning. Nice 22 model right here. I'll go over it in today's review. And I'm just seeing how this trade is panning out right here. So I've taken out a lot of the trades so far, and now I'm keeping stuff at break even. And I'm seeing if we can get all the way to all-time highs, right? Anyway, I was just looking at my trade. Let's continue. And then price continues going higher, right, on the 5-minute, and that was that. So let's go on the 1 minute and let's end it off there, where there should have been a lot more opportunities. So let's just start from the 9:30 open. We already know what's happened before then. Not really important to go in the 1 minute. Makes a high, takes the previous week high, comes back much lower, right? Consolidates at the top. Plus we hit this 4-hour fair value gap, which kept us from going lower into this opening range gap. Price expands higher. Not really a clean 22 model, right? I wish this low had been taken out by this low, but we didn't. So I would not have taken that. Price retraces pretty deeply, touching this bullish order block right here. Going higher. See, there's still no 22 model. Taking out this high from this previous week high as well. Coming back down lower, respecting premium arrays. Coming back lower here. All the way down into this 4-hour SIBI. That's now an inversion 4-hour 4-hour SIBI that I went over before. Remember on the 15-minute. Now we have a pretty clean 22 model showing, right? So low, high, lower low right here, break of market structure, fair value gap right here. If you can't see that, let's get a little closer. Low, high, lower low, break of market structure, taking out this high and this high. And we still have these relatively equal highs up here that we could target. Remember, we're in a bullish price action and we're reacting from a 4-hour inversion fair value gap PD array. That's why I like to keep these things on my chart, because it can give you more confidence that we're reacting from somewhere where you see it happen, right? Plus, we're also reacting from, I believe, this 1 minute inversion fair value gap over here, right? We're reacting from there as well. We have a small fair value gap right here, right? And so this actually could have been your first entry, because we actually took out this high with this high right here. So this could have been your first entry right here, right? Your stop is below this breaker. Your stop is below that breaker. Now, typically in the 22 model, your stop should be below the low, especially if you're not confident. But I like to keep it below 3 PD arrays, because price should not fail 3 PD arrays, as ICT teaches. So you have this breaker right here, you have this fair value gap, and you have a couple order blocks, this paneling block right here as well. Like, I would like to keep my stop below here, because this is the unicorn when there's a fair value gap nested just inside or outside of a breaker, right? And so that means you can keep your stop here. You can aim for this high right here. Typically, I like to aim for a 1 to 3, especially I know that today's a bullish day and we have highs above here. So what happens here, right? You have this low taken out, bigger market structure, you enter on this fair value gap right here. Price goes higher, but we do take some heat coming back down into the range. Reason why that happens, A lot of times, yes, I would set my stop to break even once we expand away, but because we didn't have any like real down close candles retracements, like think about what that could look like on a higher time frame. Let's even go to the 2-minute, for example, or let's maybe even go to the 3-minute. Yeah, like look at this on the 3-minute. This is also why I would have liked to maybe take this trade on the 3-minute. Like I like to see very clean fair value gaps. This is also a 22 model here on the 3-minute, right? So this actually would have been a better entry. And this is why you can see some heat taking on the 1-minute, but it's really because we're going into a higher time frame fair value gap or higher time frame inefficiency, right? So this would have given you more confidence to hold the trade. So on the 3-minute, low, lower low, you have this high broken, all right? We close through it and we have a fair value gap right here. Fair value gap right here. And price returns back to that particular fair value gap, closing on the upper half of it. So on a 1-minute time frame, you're looking at that and you're like, damn, like that probably is like a stop out, right? Like I'm probably gonna get stopped out, right? Until you pull out of the trade early because you moved it to break even. But you know, a lot of times when you're seeing just a run up on the 1-minute, typically there's inversion or there's this fair value gaps that's being left on like the 3-minute or the 4-minute, right? And so price can come back and return to those. So price comes back and returns to this 3-minute inversion fair value gap. Sorry, 3-minute BISI, right? Fair value gap, regular fair value gap. And we continue higher. Nice 22 model right there. And you could have targeted a 1 to 3, which would be right here. And if you don't know why I'm targeting a 1 to 3, this is like one of the best way to target for the 22 model, right? And I have a really good video on that. It's called Best Risk Reward Strategy, right? You don't have to worry about losses again. That's on my channel. It's in my general ICT trading concepts playlist, as well as my just like how to trade the 22 model playlist. Go check it out there as well. I do a really good review on the 1 to 3 concept. And so you see here, we break out that low, and then we come back to fair value gap, and then we go higher, right? We're hovering around this previous week high for a little while, at which point around this halfway line, I'd have taken out half my trade, move it to break even, and then let the let's ride to 1 to 3, so that way I'm actually making a 1 to 2, right? If you don't know the math on that, ask ChatGPT. It makes sense, right? If you take out half your trade at 1.5 and hold the rest until 3, that's going to give you a 1 to 2, right? And so yeah, that's because half of your trade is making 1.5 and half of your trade is making 3. So that equals to 2, right? If you do a weighted average. And so that's a 1 to 2 right there. And you didn't even get to this high, right? Or this high. And we know it's a bullish day. So honestly, like I would have taken out 90% of my trade and let the rest run, because look at how much higher we go for the rest of the day, right? And that's actually what I'm doing over on this trade as well. Like I took most of my trade out, right? But I left the runner continue to go higher because I want to see NQ hit all-time highs above here, right? Which may not get to. I may get a retracement, but I already made so much money today that I don't care if my stop loss gets hit, because I would have still been up on the day. And so like, you know, that's how you plan the game is there. But that's a nice really short term. That's a really nice 22 model. Honestly, one of the most valid I would have seen probably all day. The rest is just pretty choppy. Like there's not really much else going on here because we're entering PM session. FOMC is tomorrow, which is Thursday, that next day. And like PM session before that can be pretty choppy. And plus we've moved a lot already in the AM. Let's just scope if there's any other low-hanging fruit 22 models that form. Nothing here. Prices just continue to trickle higher, right? We do see one right here. This low, high, lower low, right? Remember what I'm saying? We can continue to go higher, but we can take out a short-term low for a continuation purge. If there's still targets higher, we still have this high to take out, and we still have that other one up here as well. And we're on a very bullish day where the opening range gap is staying open. So price continue to range throughout the day, even throughout lunch. And so we see this form right after lunch, right? Where we're now entering around that 1:30 time where price is going to start moving again. We see a fair value gap is probably forming right here on like, let's say like the 2-minute. Yeah, so there was. So there's a short-term low right here. Gets taken out by this low. Plus we're reacting from this 2-minute fair value gap. Right, discount fair value gap. This low gets taken out by this low. Break of market structure. Fair value gap in the way, right? And right here as well, small fair value gap right there. Entry could have been at this fair value gap, low below this breaker right here, and below this BISI right here as well. Plus you have like this wick in place and all that. That's 3 P raise at least, and you can aim for that, you know, at least a 1 to 3 or the other high above, right? And you would have got that as well. two really good 22 models. And you see how much easier and more confident you can take a 22 model. Like even though this is in a deep premium, if you understand the underlying bias of why price is going to go in a certain direction, you're going to be so much more confident about taking your trades, right? And so what would have happened here? Price would have come into this fair value gap right here, gone higher and closed. I probably would have set my stop loss below here. Price would have aggressively come down here. That would have probably stopped me out. Not gonna lie. When you see a candle like that after taking out this high, right? That probably would have stopped me out, and I would have been done for the day. I already made money on this first one, because I wouldn't have wanted to see a large pullback like that. But think about what I said before. Like you could probably take out like maybe say half your trade around here, and let's see if the next candle can reverse, right? Instead of this like large candle just being followed by another large candle, like take out half your trade around here maybe, and then like because you already made money earlier, right? So you can use some of that earlier money because you know that price can still go higher. Take out half your trade when you see something like this, and then keep the rest running. When you see another break of market structure, like we do here, where we go above this high, we've taken out this low, and we have a fair value gap right here, you can put the other half back on and continue to ride it throughout the day. But you know, when you're in such a deep premium like this and price is just running, like I said in the beginning of this chat, beginning of this call, a lot of times you can see short-term retracements that are a little deeper than you would have liked to see, especially when you've hit higher time frame like levels that of liquidity. So you got to be like holding your trade. Don't take out all of it because a lot of times that's just a short-term purge. Like for price to continue going higher, sometimes we need to purge liquidity a little bit. But yeah, that's today's review. Thanks for watching, and yeah, leave a comment about anything you want to learn next. Make sure you press that like button and subscribe as well. And yeah, I'll see you guys in the next video.